Hello Priya, so this video is about this test. First of all, let's calculate the record income tax. Well, the income tax, in order to calculate the income tax, we have to calculate first the tax basis. So I write to make it more understandable. So first of all, we calculate the tax basis. After that, we will add for the tax basis the tax basis increasing items. So tax basis increasing items, and after that we will of course subtract the tax basis, so the same but not increasing but decreasing items. Then we'll get the tax basis. So the tax basis is equal to we have to add for the profit before tax, so profit before tax, we have to add the tax basis increasing items. After that we have to subtract the tax basis decreasing items. As a result, we will get the tax basis. This is the tax basis what we get, and if we multiply this tax basis by 0.1, then we will get the tax, which is our aim to get. So let's see, the profit before tax, we have already calculated it. In the Excel, we can see that the last row here, the E row, is the income before income tax, or profit before income tax, the PBT. So we can say that the profit before tax is equal to 60,068. Okay, and the tax basis increasing items. Well, first of all, here is all write-downs, and write-down reverses are tax basis correcting items, so we have to check for write-downs, and we'll find some write-downs. Here is write-down of assets, included the $555,000 or forints. So we should first increase this profit before tax by this amount. After that, it is always the part of tax basis increasing items, the depreciation according to the income statement of the company, because we have to calculate depreciation according to the how can I say that, according to the corporate income tax law. So according to the income statement, the depreciation of the company was included here. It was this one, so 41186. Okay, and so from the profit before tax, we have added the tax basis increasing items, and we have to subtract the tax basis decreasing items, which is this depreciation according to the corporate income tax law, which is here. So this is how the company can determine his tax basis. So we have to subtract it, 49396. Yeah, and this is how we get the profit before tax. Sorry, not the profit before tax, but the tax basis. So we start from here. After that, I add this one and add this depreciation. This was the depreciation of the company, and after that we have to also subtract this 48 or something like that, 396. Okay, 396, and here we got the tax basis of the company. Tax basis company. So we have to add to the profit before tax. We have to add the tax increasing items after the tax decreasing items. And this is what we got. And in order to get the tax of the company, it's very simple. All we have to do is just to multiply it by 0.1. This is the tax rate in according to Hungarian law. So from this, the tax is equal to this was equal to 52413. So we have to multiply it by 0.1, and this is the tax payable by this company. Okay, this is how much the company must pay in taxes. Okay, and we have to record this transaction. Well, we have to make some entry to the journal or to the T accounts, and what we have to do now, we have to set our liability against the government. So this means that we have to debit 8 by 89 cost for income tax, and we have to credit the liability against the government, and the amount is remember that for the records, for bookkeeping, we have to calculate in forints. So this is how much forint is the corporate income tax, and we also have to put this cost. It has to decrease the profit before tax. So the entry of 493 is the recording. Is this the account for profit before tax? And we have to decrease this technical account, this 89 account, by the same amount. So now we have decreased our profit before tax by this corporate income tax. So this is what the question asked us. So the question was calculation and recording of income tax. We have calculated, and we have also recorded. The next calculation, we have to calculate the basis and the intended amount of dividends. We know that the income tax liability of the company is this one divided by or so times 0.1. So we have that, and we have to record it here. So to 12, here's the income tax liability. Okay, and after this, we have to calculate the income or profit after tax. So we have to subtract this amount from the profit before tax. And once we have this, this is the basis amount of dividends, the profit after tax of the current year, plus the retained earnings if it is positive. But remember that the retained earnings was not positive. We can go here and we can see here that the retained earnings, which is here, has a debit account, and if it has a debit account, this means that it is negative. The company has a negative amount of some profits in the previous years, so it can't be used to pay dividends. So the basis of dividends is basically the company's profit in this year, which is this amount profit before tax. And what is the intended amount of dividends? Well, the company here is wants to pay 15% of dividends to its shareholders. So the intended amount of dividends is 0.15 times this profit after tax. So intended amount of dividends can be calculated by multiplying this one by 0.1. So this is the intended amount of dividends. Okay, and the next thing which we have to calculate, it was but we have another exercise. We have to examine the dividend limitations. Well, the dividend limitations means that we can, so the current year's profit, and if the retained earnings has a credit account, the sum of these two can be used to pay dividends. So the basis for paying dividends, because the retained earnings had a negative account, a debit account. This is why we can only use this entry to pay dividends, the current year's profit after tax. And there is some limitation for dividends. This means that if the company has any shares which he has any stock, has any capital which was not paid to the company, then this means that it can be used for dividends. So basically here are some entries which indicate this fact. For example, if the company has a the negative amount of retained earnings. It has a debit account, so it will decrease the dividends which can be paid. The capital surplus, if it has a positive balance, and it can increase the dividend paid, and the unpaid share capital from parent company also decreases the amount which can be paid in dividends. So let's see our limitations. So we have for limitation this debit of retained earnings. This is 33204. Limitations for hands. So it's 3324. Okay. Another part of the limitation of dividends is this one, unpaid share capital from parent company, which is 12104. Okay, and the capital surplus decreases the limitations for dividends, and we can subtract it from these. So the full limitations for dividends, or total limitation for dividends, is just you have to add the two, the unearned, the retained earnings, which has a negative balance, and this unpaid share capital from parent company, and we have to subtract the capital surplus. So this is the limitation for dividends, and let's see the intended amount of dividends. We have to multiply the basis for dividends by 0.15, so we can see that we want to pay these amounts, this amount of dividends, but from the full basis of dividends, let's see that how much can be paid. So this can't be paid because yeah, we can see that the company wants to pay less dividends than the basis for dividends minus the full limitation for dividends. So the company can pay all this 8,000, a little bit more than 8,000 or 1,000 forints of dividends because according to the limitation, the dividends can't be bigger than this number, but it can be smaller than this number. So actually, the task was to we have examined the dividend limitations, and we can say that the company can reach this goal to pay 15% of its profits as dividends, and we have to record it also, and also the net profit. So let's see how does it look like in as a bookkeeping entry. Well, let's see. We have to debit the 9493, and we have to create. We don't know that who the company pays this dividend. If it pays for partner company and associated companies, then we can credit 458. If it pays this for a company which is not an associated company, then we can use 459, and we can also use 479. 479 is people, ordinary people, not companies. So the company can pay even for people who are shareholders dividend, and we don't know who the dividend is paid, who received the dividends. This is why we can use this at either this one or this one or this one. This is the recording of dividends. So we have decreased the 493, the profit of the company by this dividend. And after this, we can evaluate the net profit of the company. By the net profit of the company, we have to debit the 493, the balance of 493, and we can credit the 419, which is the net profit for the year. So this entry will even can be seen in the balance sheet of the company. So this is the net profit of the year, basically. After these, we have calculated the income tax, we've calculated dividends, and after this, what remains from the profit before tax is the net profit of the year, which can be seen also in the balance sheet. Okay, on the next video, we will begin to calculate these factors of shareholders' equity. So we have to use these numbers here to create this table. Thank you for your attention.